Every single person in this room, every single one of you has the potential to go from broke to billionaire. But here's the hard truth. Most people will never tap into it. Why? Because they don't have clarity. They don't know exactly what they want, and they let limiting beliefs choke their dreams before they even start. Well, today, that stops right here, right now. You're about to learn the 10 unstoppable keys that took me from sleeping in my car to owning empires. This isn't theory. This is battle-tested, billionaire-proven strategies. So lean in, turn up your energy, and let's go. Clarity is power. Know what you want. Most people wander through life with a vague sense of dissatisfaction, knowing they don't want to struggle, but never defining what they truly desire with precision. They say things like, I want to be rich, or I want freedom. But these are hollow phrases without specificity. Clarity isn't just about setting goals. It's about creating a vision so sharp that it pulls you forward with magnetic force. The difference between wishing and achieving is the willingness to define exactly what success looks like, down to the dollar, the lifestyle, and the impact. When I was broke, I didn't just say, I want money. I wrote down the exact number I needed to never feel powerless again. I visualized the bank statements, the properties, the businesses, the freedom to make choices without financial fear. This wasn't fantasy, it was a blueprint. The brain is a goal-seeking mechanism, but it needs a clear target. Without one, you'll drift, reacting to circumstances instead of commanding them. Most people fail because they're clear on what they don't want. Debt, stress, limitations, but foggy on what they do want. They focus on escaping pain rather than pursuing a compelling future. That's why they self-sabotage. The moment difficulty arises, they retreat because their why isn't strong enough. But when you know exactly what you're fighting for, not just a better life, but $20,000 a month in passive income by December 2025, or owning a portfolio of cash-flowing assets, every decision aligns with that outcome. Clarity also exposes the gaps between where you are and where you need to be. If you declare, I will earn 1 million this year, but you're currently at 50K, the disconnect forces you to confront reality. Most people avoid this discomfort, which is why they stay stuck. But the moment you define the target, your mind starts solving for it. You notice opportunities you'd have missed, say no to distractions, and attract resources because your focus is laser sharp. This is why the wealthy operate differently. They don't just want more, they quantify it, obsess over it, and reverse engineer the steps. A billionaire doesn't think, I hope I make money this quarter. They know the exact revenue targets, profit margins, and growth metrics required. That's the power of clarity. It transforms hope into strategy, dreams into deadlines. Destroy your limiting beliefs. Your bank account, career, and lifestyle are nothing more than physical manifestations of your deepest beliefs about money, success, and yourself. If you're struggling, it's not because the system is rigged or because you're unlucky. It's because somewhere inside you believe something that contradicts wealth. Maybe it's money is evil, rich people are greedy, or I don't deserve this. These are silent killers, and until you annihilate them, you'll keep self-destructing. I grew up broke, surrounded by good people who worked hard but never escaped scarcity. I internalized their beliefs that wealth was for others, that struggle was noble, that wanting more was selfish. It wasn't until I challenged these ideas that my life changed. I realized you can be a good person and be broke, or you can be a good person and build abundance. The universe doesn't reward suffering. It rewards value. Limiting beliefs act like invisible fences. A dog trained to stay within an electric boundary will stop at the edge even after the collar is removed. Humans are the same. We hit ceilings not because we can't go further, but because we've been conditioned to think we've gone far enough. I'm not smart enough to invest. I'll never be wealthy. It's too late for me. These aren't truths, they're mental prisons. The fastest way to break free, first identify the lie. Write down every negative assumption you have about money and success. Then challenge it with evidence. Find someone who disproves it. A person who started with less and achieved more. If they did it, why can't you? Next, reprogram your mind with new beliefs. Affirmations alone won't work. You need proof. Take small wins to build confidence. Invest $100 and watch it grow. Negotiate a higher rate. Prove to yourself that the old story was wrong. Most people never question their beliefs. They blame the economy, their boss, their upbringing, but the real bottleneck is between their ears. The moment you take responsibility for your mindset, everything changes. You stop waiting for permission to succeed. You stop fearing failure because you know it's just feedback. You stop comparing yourself to others because you're too focused on your own growth. Wealthy people aren't genetically different. They just refuse to entertain thoughts that keep them small. They replace "I can't" with "how can I?" They see obstacles as tests of creativity, not dead ends. If you want to change your life, start here. Eradicate the lies. Burn the mental rule book that says you have limits, because the only thing truly holding you back is the belief that you're held back. Master uncorrelated investments. The biggest mistake investors make is putting all their money into assets that move together. When the stock market crashes, so do their portfolios. When real estate dips, their net worth plummets. The wealthy don't play this game. They build portfolios where some assets zig when others zag. This isn't just diversification, it's strategic insulation against volatility. The goal isn't to avoid risk entirely, but to structure your investments so that no single economic shift can wipe you out. Most people think investing means choosing between stocks, bonds, or real estate. That's retail investing. What the masses do, the ultra-wealthy, operate differently. They allocate significant portions to private equity, private credit, venture capital, and alternative assets like litigation finance or royalties. These aren't tied to the public markets, so when Wall Street panics, their returns stay steady or even climb. For example, during the 2008 financial crisis, while traditional investors lost 40% or more, top hedge funds like Ray Dalio's Bridgewater made money. The difference? Uncorrelated strategies. Private equity is a prime example. While the S&P 500 averages 9 or 10% annually over decades, top-tier private equity firms consistently deliver 14 or 20%. Why? Because they're not just betting on market movements. They're actively improving businesses. They buy companies, streamline operations, scale revenue, and exit at multiples of their initial investment. This isn't passive. It's hands-on value creation. And because these deals are illiquid, you can't sell your stake with a click. They're insulated from the daily panic of public markets. Private credit is another powerhouse. Banks have retreated from lending to mid-sized businesses, creating a $1 trillion opportunity for private lenders. These loans yield 8 and 12% annually with default rates below 2%. Better returns than junk bonds with far less risk. The wealthy don't just buy these loans, they own the lending platforms, earning fees and interest simultaneously. It's like being the bank instead of the customer. Then there's the secret asset class, fractional ownership of sports teams. Leagues like the NFL, NBA, and Premier Soccer are closed systems. No new teams are added, making existing franchises a key assets. The average sports team has appreciated 18% annually for decades, unaffected by recession. Why? Fans are fanatics. They'll pay $20 for a beer in a stadium without blinking. Broadcast rights, sponsorships, and global merchandising create cash flows that stocks can't match. And now, new rules allow investors to buy stakes in multiple teams, spreading risk across leagues and geographies. The key is constructing a portfolio where each piece thrives under different conditions. Energy, infrastructure booms during inflation. Litigation finance wins when courts reopen post-pandemic. Royalties from music or patents pay regardless of stock prices. This is how the rich sleep well at night, not by predicting the future, but by ensuring they're positioned for any future. Seek ace-minute risk-reward. Billionaires don't take wild risks. They engineer deals where the upside dwarfs the downside. They look for situations where they can lose 1x but make 10x. This isn't gambling, it's calculated asymmetry. Most people do the opposite. They risk their life savings on sure things that aren't sure at all, like buying a single rental property in their hometown, or chase lottery ticket stocks hoping for a miracle. The wealthy play a different game entirely. Warren Buffett's first rule of investing is don't lose money. His second rule, refer to rule 1. This isn't about avoiding risk. It's about controlling it. When Buffett invested $5 billion in Goldman Sachs during the 2008 crisis, he got preferred shares paying 10% dividends plus warrants to buy stock at a discount. If Goldman failed, he'd be first in line to get paid back. If it survived, which it did, he'd make billions. Heads he wins, tails he doesn't lose much. That's asymmetry. Real estate developers use this principle daily. They buy land with contingent contracts. If they can't get zoning approval, they walk away with minimal loss. If approved, the value skyrockets. Tech founders do it too. Bootstrap until they have traction, then raise capital on favorable terms. The lesson, never bet everything on one roll of the dice. Structure deals so your worst case scenario is manageable and your best case is life-changing. One powerful asymmetric move is investing in general partnerships, GPs, rather than just funds. Most private equity investors are limited partners. They give money to a fund and hope for good returns. But the real wealth goes to the GPs who own the management company. They collect 2% annual fees on assets plus 20% of profits. Buy a slice of the GP and you're not just earning returns, you're earning on everyone else's money. One GP stake I invested in has grown from $3.8 billion to $22 billion in assets under management. The fees alone guarantee returns while the profit sharing creates exponential upside. Another example, energy transitions. Traditional oil wells are volatile, but hydrogen infrastructure projects today have government subsidies covering 50 to 70% of costs. Your downside is capped, but the upside as the world shifts to clean energy is enormous. The same applies to litigation finance. You fund a lawsuit for $1 million. If it loses, you're out that money. Though top firms win 803.5, focus on value, not just money. Money follows value. It's that simple. The wealthy understand that accumulating dollars is just a byproduct of solving meaningful problems at scale. Look at any self-made billionaire and you'll find someone obsessed with creating transformational value first. Jeff Bezos built Amazon by focusing relentlessly on customer experience. Elon Musk tackles industries where he can move humanity forward. The moment you shift from how can I get money to how can I deliver 10x more value than anyone else, everything changes. This is why private equity firms thrive. They don't just buy companies, they transform them. They bring better management, smarter systems, and growth strategies that multiply a business's worth. The same principle applies whether you're an employee or entrepreneur. Ask yourself daily, what unique value can I provide that no one else is delivering? How can I make my clients, customers, or employer dramatically more successful? When you become indispensable to others' success, the money follows automatically. The market ruthlessly rewards disproportionate value creation while punishing those who chase quick bucks without substance. Take massive action now. Analysis paralysis is the silent killer of dreams. The wealthiest people I know share one trait: they execute faster than others. While most are stuck in research mode or waiting for perfect conditions, winners take imperfect action immediately. Every day you delay is compounding opportunity lost. That investment you're overthinking, the early movers are already capturing the upside. That business idea you're polishing, someone with half your smarts is out there building it. The math is brutal. Small, consistent actions compound into extraordinary results over time. 500 invested monthly at 121 million in 25 years. One new business contact daily grows into an unbeatable network. The key is starting before you feel ready, because you'll never feel ready. Successful people don't have fewer doubts. They just refuse to let doubts paralyze them. They understand that momentum creates clarity, not the other way around. Every massive fortune began with someone deciding to act despite uncertainty. The market doesn't care about your perfect plan. It rewards those who show up and ship. Right now, there's an asymmetric opportunity waiting that will disappear once the crowd arrives. Your future self will either thank you for starting today or curse you for waiting. Million back, controlled risk, outsized reward. The mindset shift is critical. Average investors ask, how much can I make? Sophisticated investors ask, how much can I lose? They focus on the risk side first, ensuring that even in disaster, they survive to play another day. Then, and only then, they pursue upside. This is how fortunes are built, not by swinging for the fences every time, but by consistently finding bets where the math is overwhelmingly in your favor. Leverage time as your greatest asset. Time is the ultimate currency. The wealthy don't trade hours for dollars, they build systems that multiply their time. While most people focus on saving money, billionaires focus on buying back their time through delegation, automation, and strategic outsourcing. The key is identifying your unique ability, that one thing you do better than anyone else, and ruthlessly eliminating everything else from your plate. Money can be regained, but time spent is gone forever. That's why the ultra-successful treat their calendar like a sacred document, saying no to anything that doesn't align with their highest purpose. They understand that compounding applies to time too. An hour invested in learning a high-value skill or building an asset pays dividends for decades. The middle class worries about hourly wages, while the wealthy create assets that work while they sleep. Your most valuable resource isn't in your bank account, it's the hours in your day. Master time, and you master life. Build unfair advantages through relationships. Your network determines your net worth. This isn't a cliche, but a mathematical reality. The wealthy don't succeed alone. They tap into ecosystems of influence and opportunity that average people never access. Private equity deals, off-market investments, and career-making opportunities flow through personal connections long before they hit the open market. But building real relationships isn't about networking events or LinkedIn connections. It's about becoming valuable first. The law of reciprocity is absolute. Provide massive value without expectation, and the universe returns it tenfold. Mentors, partners, and investors gravitate toward those who demonstrate competence, integrity, and generosity. The most powerful connections happen when you stop asking, "What can I get?" and start asking, "What can I give?" Surround yourself with people who challenge your thinking, open doors you didn't know existed, and elevate your standards. In the game of wealth, your circle either becomes a ceiling or a launch pad. Choose wisely. Master the psychology of resilience. The path to billions is paved with setbacks most people never recover from. What separates winners isn't talent or luck, but their ability to get back up faster and stronger. Every billionaire has faced catastrophic failures, betrayals, and moments when everything seemed lost. The difference? They treat failure as feedback, not fate. They cultivate a mindset where obstacles become fuel and critics become motivation. When markets crash, they see discount buying opportunities. When plans fail, they pivot without self-pity. This mental toughness isn't innate. It's built through deliberate practice. Start reframing challenges as training for the next level. The most valuable asset you'll ever develop isn't in your portfolio. It's your ability to persist when others quit. Create multiple flows of capital. The wealthy never rely on a single income stream. They engineer systems where money comes from multiple directions simultaneously. While employees trade time for salary, the rich build businesses that generate revenue without their daily involvement, investments that pay dividends, intellectual property that earns royalties, and networks that surface unexpected opportunities. The goal isn't just to earn more, but to design an ecosystem where capital flows from assets, relationships, and ideas. 1 cash flow can disappear overnight. 5 create unshakable security. Start small, but think multi-dimensional. Turn skills into products, relationships into partnerships, knowledge into courses. True wealth isn't about how much you have, but how many ways it can grow without your constant effort. Let's recap like your life depends on it, because it does. First, get crystal clear on what you want. No vagueness, no maybes. Second, destroy those limiting beliefs that have held you hostage. Third, master uncorrelated investments so you're bulletproof. Fourth, seek asymmetry risk reward like the billionaires do. Fifth, focus on value, not just money. Sixth, take massive action now because speed wins. Seventh, leverage time like it's your most precious currency. Eighth, build unfair advantages through power relationships. 9, master resilience because setbacks are setups for comebacks. And 10th, create multiple flows of capital so money chases you. This is your time. This is your legacy. And if you're ready to go all in, hit subscribe and join the Tony Robbins track where we don't just teach success, we engineer it. Now, Go, make it happen. You've got the blueprint. Now it's time to execute. Remember, wealth isn't about luck. It's about strategy, mindset, and taking massive action. So go out there and build your legacy. And if you want more life-changing strategies like this, smash that subscribe button and join us at Tony Robbins Track, where we turn dreams into billions. Now, go get it.